right. All right, everyone. Hey, good afternoon, good evening, wherever you are in the world. This is Mark. Thanks for joining me for another Greenbridge Investing market analysis session. So I want to address a few things. I'm sorry I'm running a little bit behind today. I usually do these things a little earlier. So I do appreciate you joining me. I'm going to make my analysis brief so that we can spend more time on the questions that you may have and charts that you want to see. So the dollar strength continues and the stock market faked everyone out as far as longs go. So I want to talk about that. I want to talk about how nimble you have to be in these situations, and why things like opinions or some sort of bias can hold you back and cost you a lot of money. Also, in environments like this, stop orders, whether it's getting into a trade or getting out of a trade, are extremely helpful. So I want to talk about some of these things. I mean, it may be a basic concept, but people don't realize how effective those are. And I'm going to bring up some of our recent trade ideas as examples. All right, so with that being said, if you have any particular stocks or markets that you would like to see, please share them in the chat now. So once I complete my analysis, I can get into the charts that you want to see. All right, so let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. By the way, you guys like the sound in on the podcast yesterday on the Talking Markets with Mark and Andrew, or really it was just Mark and Henry. But I think I fixed the sound. So hopefully, I didn't see any complaints. Anyway, just wanted to mention that. So let's begin here with, before I get into Bitcoin, you know, I always have my Bitcoin chart up. I want to actually begin with the Nasdaq, okay? Because that's a key thing here with the fake out, right? And the Nasdaq all along was not actually the most recent momentum, and I mentioned this to Andrew. I said, watch out, this is an aggressive trade. Now we had a long signal, and this is what I want to talk about with being nimble. We had a long signal the other day. What was that? I think on Monday, back here, the pin bar. I put it in the chat room, right? It's a buy signal, and the thing is, that had potential to work its way higher. But the thing is, if you get a candle like this right now, takes out yesterday's low, the party is over, okay? This thing is not a long anymore. This is not a bear market. It's something to keep in mind. So when I talk about being nimble, this is where you have to rely on prices and levels to make decisions, not opinions, not going to watch the news to see why the market's bearish today. You know, I mentioned earlier in the chat room that Chairman Powell was going to speak again, and this is the kind of stuff that can happen. I don't know what he said. You know, I know that yesterday, whatever he said, the market liked it. Today, the market doesn't like it. So that's just the way it is, right? And he speaks again tomorrow, along with the Treasury Secretary. So we can get some more wild moves. Hey, Michael. So your question there, Jamia trade, to be kept active. Okay, so, well, no, the thing is that setup is still okay because it never activated for one. I'm going to talk about that, Michael. So thanks for bringing that up. DJ, I will send you. Yeah, right. Okay, cool. So, all right. Okay, no problem, Michael. No problem. Thanks for stopping by. So again, the thing with this, we sent out that NSX USD trade idea, which obviously stopped out. And that's why a stop is so important to have, because if you didn't have that stop in place, you lose so much more money, okay? And it's just unnecessary. It gets frustrating at times when it just taps you out and then turns. Okay, it's going to happen. And sometimes you have to just be quick enough to get back in. But in a situation like today, when you got this is a decisive low, okay? Let me explain that a little further. So, you know, I always talk about failed lows, and I always talk about lower lows or higher lows. Compare these two candles. This low is pretty much lower, okay? And there's no recovery attempt. We have 10 minutes to go before this thing closes. There's no recovery attempt. On Monday, we had this situation right here. That's barely lower, relatively speaking, and there was a recovery attempt. That's the difference. So that's how you know, oh, okay, this is worth trying to go along once it breaks the high, and this right now is not. This is ugly. Should not be closing weak if there are buyers in there. On top of that, we established a lower high. So that implies more weakness going into the next couple of days. Now, again, Chairman Powell can say something that changes everything, but the way this looks, based on this type of momentum, I would be anticipating a test of this low, 106.78, perhaps tomorrow or the next day, and an attempt to break that low. All right, and obviously we're getting closer and closer to the trend support. Now we obviously have some supports back here which may become, in play, which is the 10,465 area. It's possible, okay? But the key level is this one here, which is that 10,230 area. You could round that to 10,250 or whatever, but this area here, this is where the market needs to find stability. So in these situations, just like Bitcoin, you don't buy into these until stability appears. So now let me get into Bitcoin. Actually, before I do, let me get into the S&P, because the S&P is pretty much the same situation. Remember yesterday or the day before when we were doing our session here, I talked about the S&P because it wasn't exactly looking like the Nasdaq. The Nasdaq had a much stronger signal, but the S&P gave us this inside bar, right? And I mentioned this about Bitcoin too. These inside bars like this do not guarantee a buy signal. They could be one. In fact, today it tried to be a buy signal, but it reversed quickly, and now we have an outside bar. So remember, inside bars are typically momentum continuation patterns, and the momentum is bearish. So we didn't get the reversal. It tried, it failed, and now everyone's getting hammered, right? They're all banging it out. Okay, no problem. So I would not be going long. I would be at least, hopefully you're not in anything. It's still a tough place to short because, I mean, in theory, this thing should break and go lower. If you're going to short anything like this, it's best to use put options, because if you're wrong, it's not as painful. Or you can use CFDs, because you can control the contract sizes much easier. They're much smaller increments. So if you're wrong, it won't cost you thousands of dollars. Or if the thing is, you can even be right, but you know what these things do? And this is one idea to consider if you trade CFDs, is this thing may try to bounce, okay? A bounce attempt could be a couple of 100 points. So if you put an order like at the middle of the bar, the middle of the range, a lot of times it'll fill you and then continue lower, right? So that's one thing you can try as well. And if you're wrong, you're not losing as much. You only have half the bar where your stop is going to be instead of the whole bar. All right, just something to keep in mind. So that's the Nasdaq and the S&P. Let's take a look at Bitcoin, because Bitcoin has been correlated to the stock market, it appears. But I think the real relationship that's going on here is the correlation to the U.S. dollar, because anything that's counter to the dollar right now, or that trades against the dollar, like commodity, like stocks, like pretty much everything, is weakening in this face of a strengthening dollar. We're going to take a look at the dollar index. We're going to take a look at the dollar franc and the dollar Canadian. But so I think Bitcoin is just really being affected by that. Maybe there's some news. I have no idea. All I know is that we had that same inside bar situation as the stock market, like I pointed out. Okay? And this is why I warned people. I said, these levels don't guarantee a bounce. Even if a bounce begins, we talked about we want to see structure, and we talked about the differences as to why. This is why. These inside bars can become continuation patterns. So people that are impatient, or they get too excited too quickly, they jump in, they think, oh, I got the support, I got the bottom. Now you're caught in this thing. And hopefully, you've exited, because this thing should not have taken out that inside bar low. Okay, now it's possible that over the next few days, we see this thing try to develop stability. It's possible. Maybe this is the level right here, which is around this low, the 10,255. Maybe it finds, some support in there, and perhaps it will give more structure to work with. But right now, there's nothing to do there but step aside. Some may want to go short this thing. It's a risky trade. You know, we don't short Bitcoin, but on the break of the inside bar low, I would anticipate some more bearish momentum unless there's no follow through, right? Because, you know, people tend to focus on the very near term type of stuff. But like someone put, there was someone put an interesting comment in my my recent Bitcoin analysis. When in doubt, zoom out. I like that. So I'm using it. And when you zoom out, this trend is not bearish. So we do have the lower high. Yes, we do. And we're getting the bearish momentum from it. Okay, fine. We're pretty much clearing this first inflection point. Hasn't fully cleared yet, but it's trying. Okay, no problem. So we wait for the next inflection point. Unless we get stability over the next few days, then this could turn into a buy signal and fake out the bears. We don't know. We can't make that judgment until the candles give us more information. Okay, but right now at this moment, this thing, you know, looks bearish, and I would stay away from it as far as longs go and let this thing stabilize. Let's take a look at some other coins real quick, like Link USD, right? Chainlink. I've been warning about this. I've been warning and warning. You know, we had that double bottom trying to develop, and I said if Bitcoin doesn't follow through, these things are going to get hammered. So another example as to why location alone is not enough. Let's take a look at Litecoin, which was giving us a pretty ugly chart the whole time. So Litecoin, I figured it'd be doing worse than this, but it has the inside bar, okay, to go short. So I would, hold on a second. I would just avoid this thing, right? No reason to go long. You know, if you short these things, okay, that's it. That is a sell signal developing right there. But keep in mind, if Bitcoin fakes out, you're going to get caught. So just something to keep in mind. You should have very conservative targets. That often helps. One thing you can do is that's where a smaller time frame can be helpful, because you can base your targets on a smaller magnitude. There's a better chance you'll reach them, as opposed to, oh, this thing's going to go to 5,000 or something that's unreasonable right now. Let's take a look at another one, XRP. A lot of people usually ask about this one. Same situation, right? People have asked about it in my recent sessions here. And this is what I've been warning about, because Bitcoin is still the leader. And we had the lower high. It's going for the lower low. Can this turn into a failed low? Yes. If you notice, the chart patterns are all the same. Inside bar, took out the low. All right, just looks just like Bitcoin, looks just like Litecoin. It's all the same trade. So, you know, it's funny. You go around to these other sites or these other gurus or whatever, and they'll write all these reports on these things as if they trade on their own. You know, they'll write this report and they'll put all this analysis on the chart and all this and all that. And they imply the idea that these things are moving on their own, but they're not. It's just one big Bitcoin trade. So that's an important thing to understand. We tell people all the time, if you're going to take on these altcoins, think of it as you're just taking smaller versions of Bitcoin. So Bitcoin is your leader. Follow Bitcoin, just like the S&P and the Nasdaq are the leaders for the stocks. Okay, so just something to keep in mind there. Let me show you real quick now the dollar index, and then I'll look at like 1 or 2 Forex pairs, and then we'll get into gold. Okay, so the dollar index, which is the basket of currencies against the U.S. dollar, which I believe the euro is the most weighted, the greatest weight. Look at this. We've been talking about, and I've said this before, we've been talking about a dollar reversal since August. Okay, and we were a little early with our Canadian. We have another Canadian trade which is doing well, but we tried Canadian trade and it was very tough through here. But here it is. Look at this structure. Okay, the high or low. That's a key piece of information right there. People don't realize how important that is, because that's basically a sign of a structural change. So, you know, the dollar has been bearish all this time, pretty much, and a bearish environment is a series of lower highs and lower lows, right? Well, a few weeks ago, whatever, you had this move here that led to this little peak right there. That took out the first series of lower highs. A weak market shouldn't do that. But okay, maybe it's just being noisy. But when it does something like that, you want to look for the higher low. I talked about that with the stock Veritone, which I'll bring up here too real quick, but I shared that in our chat room earlier. And you want to watch for that higher low. Here it is. So this is a momentum reversal, and I don't know how high the dollar is going to go, but the inflection points, the first inflection point is around here, okay, around this area, which is 95.5, and we're fooling around right now at 94.25. So that's a lot for the dollar. All right, that's a lot, which means the euro, the pound, anything that trades against the dollar in that configuration is going to be weak. Okay, on the opposite side of that, dollar franc, dollar Canadian are going to be strong, right? Because basically it's the dollar. Look, this is dollar franc. Look at this thing. It's vertical. This thing looks like Jumia. All right, so that's the thing. This currency was the most stable during that dollar ugliness. Okay, it was a much better choice than the Canadian. But anyway, one thing I want to point out about this is the Swiss National Bank, or the Swiss Central Bank, or whatever, Bank of Switzerland. They're having their interest rate announcement, I believe, tomorrow. It's either today or tomorrow. I have to check the economic calendar again. But that can, if they say something that surprises this thing, that can have an effect. So either way, you don't want to chase this. If you're not in it, there's nothing you can do. But the point is, this is where we can find new buying opportunities on a pullback. Okay? So that's what we'll be watching for. And the first inflection point is very easy to see. It's right here. That's the first inflection point, which is not that far away. 91.5 area. It's a good 100 pip move. Okay. So that may be a buying opportunity for the dollar franc over the next couple of weeks. And let's take a look at dollar Canadian real quick. I don't have the levels for the trade on our chart. This is one of our old trades, so you can't go by these. Andrew sent out a more recent trade. And look at this thing. Now it's going. Looks just like the dollar index, doesn't it? But we were betting on the failed low situation. I remember around this pin bar, someone in the chat room was saying, let's give it one more try. I'm like, no, forget it. I hate the dollar Canadian. I hate it. And I didn't take that. Okay? And now look at it. So that person was right. I should have listened to him. I forget who it was. Anyway, but the point is, same as dollar franc, this thing, all we need to see is a pullback, and it can give us another buying opportunity. It's just something to keep on your radar for you Forex traders. Now, let's take a look at gold, because again, gold is being affected by the U.S. dollar. And people ask a lot about gold, and gold is getting hammered. So another great example of why you cannot use opinions or fundamentals in a short-term environment, especially going into the election cycle. I got an email today from one of my brokers, Interactive Brokers, that I use for stocks and options. And the email or the message was that they're going to be changing their margin requirements pretty much at their discretion as we get closer and closer to the election, because they're anticipating some wild moves. And I've been talking about that, for a while. As we get into the election, things are not certain. There's going to be uncertainty all over the place. There's going to be surprise news here, surprise news there, and it's going to make a mess of the market. So I'm not surprised to see such a message. I'm sure other brokers are sending out similar messages. They're going to change margin requirements, meaning they're going to raise margin, especially like overnight margin and stuff like that, which means you need more money to take the same position. Okay, they do that basically to protect themselves, but in a way it protects you. But it's not very helpful for people with small accounts, because now it's going to tie up more of your capital. So just something to keep in mind. But I thought it was very interesting. So gold, look at this thing. So fundamentally, right, gold should still be generally strong, but this thing got hammered, and we've been waiting for this 1850 level. We've been talking about it and talking about it. And today we're closing at 1861. We're only 10 points away. It can do that very easily. So, we would never short something like gold, but this, as ugly as it may look right now, this can be a buying opportunity. But at the moment, we have no structure or setup. We're also fooling around at a potential range low right there. I mean, that's an extreme range low, but it was there at one point. That was the average range low right there, which is basically like the low 1900 area. And the extreme range low was this 1862. And here we are fooling around with that area right now. The thing is, there's not even, not even a thought of reversing right now. Not even a thought. I don't see a pin bar. I don't see anything green right there. So we just have to see how this thing behaves around that next level. It may clear it and go slightly lower. I don't know. There's probably too many longs in gold that were caught up in the fundamentals. When gold was pushing up here, and silver too, when gold has these pushes, right? Everyone gets into the whole gold is going to 10,000, gold is going to 3,000. All the conspiracy theorists come out. You're going to get all kinds of emails. Gold, better buy your gold now. There's no gold in Fort Knox. All that nonsense. You have to ignore it, okay? If you had taken a gold long by some chance, you should be out of it, all right? For a loss, you should be out of it. Take the loss and wait for the next level. Gold, I talked about this triangle and looked at it in terms of the Elliott wave structure with the 5 waves. And when it reached that 5th wave, it should have broken out, okay? And it didn't break out. It failed. And now we took out the support. That's it. So we have to wait till that thing stabilizes. I wouldn't classify that as a trend reversal. It's just an extreme push, okay, to the range low. And we're probably going to see more movements like that going into the election. It's not that far away. All right, so something to keep in mind. And same with silver. Silver just follows gold. So XAG, silver just follows gold. So you can't overreact to stuff like this. You can't say, wow, silver's going to go to 0. It looks horrible. No, when gold stabilizes, silver will stabilize. So, this is why physical silver is a better choice, because you don't have to deal with this nonsense and you're not leveraged. This leveraged stuff can be very painful in situations like this. Okay? So that's that. We just have to wait for stability. And if we see it, we're going to buy gold and gold stocks, not silver, not paper silver anyway. All right, so let me get into the next thing here. I think I pretty much covered all the things I wanted to cover. Let me get to your questions in the chat. And by the way, if you're new to Greenbridge Investing, please make sure to check out our website at greenbridgeinvesting.com. We have a swings trade signal service by text and by email. We also have a chat room where we share perspective insight throughout the day. And we have portfolio management ideas, which we send out by email as well. We have a 7-day free trial, so make sure you check that out. You can see what we do, and it won't have to cost you anything if you don't like it or if it's not for you. Also, if you like this channel here, make sure you register for the channel, for the YouTube channel. And if you like my video, please press the like button. I would appreciate that a lot. And also, if you can, please share this video. If you think it's valuable to people in your social network, please share it on your social network as well. I'd really appreciate that. All right, so with all that, okay, no more promotional stuff. Let's get into some more business here. So, okay, Michael was asking about Jumia. All right, now, is Jumia trade to be kept active? So Jumia was the trade of the week that I announced yesterday in the podcast. We've been keeping a very close eye on Jumia because it's got a lot of potential. Now, I like what it was doing yesterday, but look at this. This is a very good example, right? So first let's talk about the trade idea. So I emailed this out. If you're a free member of Greenbridge Investing, you will get this trade. You should have gotten it in your email. There's no limitation to that. There's no trial period. You will always get the trade of the week. Now, we used a buy stop. Okay, you see that? Buy stop. I purposely put that there in case we got something like this. So today, what's today's high? Today's high is 815. Okay, the buy stop was 850. So a buy stop, if you don't know, is an order that you put into the market. It's a resting order that becomes a market order. It's a stop order that becomes a market order if the price touches that level. And then it activates the trade. So we were able to avoid this red candle because the trade never activated, right? That's why I do that. That's why I make the market work. It doesn't always work out, but when it saves you the money, it's worthwhile. It's really worthwhile to save you from this, because now this doesn't look so good. The location is still fine, but I wouldn't want to be long right now. I want to wait until there's some stability, especially in the face of that bearish looking stock market. This may now, all these longs that bought back here thinking, okay, same thing I thought, oh, this thing's going to bounce. Now they're all caught. Okay, and they may be banging it out over the next couple of days. I don't want to be caught in that, and now I don't have to be. So that's that. Now, so Michael's question is this trade active? Is it still active? Yes, I would leave that 850 buy stop in there, and maybe we'll adjust it lower if we can get a better level. But let's look at where 850 is. Okay, 850. I'm just going to position it on the chart here. 850 is right there. Okay, so if it breaks out of that level, let's say it recovers this bearish pin bar, by Monday or something, and it takes out that high, I'd be interested in a long, definitely. Okay, this current level that it's fooling around at right now, the low sevens, this is a pretty heavy duty support area. So it can go a little bit lower, but I'd definitely be interested in a failed low if we can get one here. Also with the options, right? DJ was nice enough to point out the year-long option $15 call, which is cheaper now. I was looking at it before. It was $2.05. It was $2.05 the other day. You could probably get that thing at like $1.80 or something now for a whole year. All right, to reach 15, which I still think there's a good chance if this thing can recover. And as you can see, when it moves and it gets into the spotlight, it moves, right? And why does it move like that? Because day traders pile into this thing. It's all on their radars. It's all on their scanners. They're all piling in, and that's who's going to let you out of the trade, a day trader. Okay, so that's what I'm looking for in that situation. I still like it, so we're going to keep that order out there. But see, for the trade of the week, these are really up to you. Like we don't monitor these as much if it's a trade of the week, if we didn't send it to our active investor customers, because we spend all our time monitoring those. Now for Jumia, I am thinking about sending out an options trade for our active investors. I haven't figured out the details of it yet, but that's what I'm thinking about for that. Okay, Michael, so that's the answer there. DJ, okay, yeah, okay, cool. I could use a bottle of that. Jay Watt, since you can you time, when start buying back some stocks? I mentioned, okay, so let's take a look at that. SPCE. Now, okay. So here's the thing. First we want to look at the levels, right? And we want to say where we are level-wise. You have your inflection point right there as far as support, and you have some over here as far as resistance. So obviously you're nearer support. Okay, that's fine. Right now, there's no friendly candle there. Okay, the recent couple of days it's been trying to deliver a pin bar, but a pin bar alone actually is not enough. I was thinking about doing a webinar just on setups, just on the details of a setup, because people think, or less experienced people may think, oh, pin bar, it's good enough. Not good enough. You got to take out the high of the pin bar by some amount higher, not the exact high, because everyone buys up there. So so this took out those lows. Not good. Okay, not good for the short term. So as far as to answer your question, when to start buying back some stocks, timing that is going to have to do with the major index and the stock itself, right? So you want to start gauging relative strength. I would first wait before buying stocks. If you want to, there's another way you can do it too. If you're very long, if you're longer term oriented. Remember, I'm very short term oriented, so I'm always looking for swing trades and that type of stuff. For long term ideas, you can, buying on a low is not bad. The thing is, there's just really no reason to buy at this moment. But if you were to buy, the best thing to do is you go in dramatically smaller than you normally would. So for example, if you normally trade 100 shares, you can go in with like 10 shares or 15 shares. It's tiny. And if it keeps going lower, you're going to be like, all right, who cares? And then you just average into it very small. And if it keeps going and going and going and starts breaking in supports, then what do? You stop buying it and you just let it stabilize, right? So for example, let's just say you have a target size of 100 shares. You say, okay, the most I want to have is 100 shares. So you say, okay, I'm going to buy 15 shares now, all right, because it's on a low, but it's most likely going to go lower. I'll buy 15 more shares if it tests this low over here of $16, that area, that support area. If I don't get a reversal there and it goes lower, then I'm going to stop buying. And at that point, I'll only have 30 shares instead of 100 shares. So then you wait for stability. And as it stabilizes, then perhaps you add another 15 shares. And then it gives you a higher low and starts to break higher. Then you add another 15 shares. Eventually, you're going to have your 100 shares, and you're going to have it from a stabilized average price. Okay, so that's one way to do it, is you control risk with position size. Common mistake is people get too big too fast. Oh, I'm going to buy 100 here. I'm going to buy 100 a few points lower. I'm going to buy 100 a few points lower. That's a big mistake and can wipe you out very quickly. You have to adjust your size, okay, to something that you can handle with no problem. And you basically, it's like you're taking small bites. All right, so I hope that answers your question. Now, that's this stock in particular. You just look for those inflection points. And if it gets there, you have an opportunity to, take a little bite for the long term. That's not a good short-term strategy the way I just described it. Now, at the same time, you want to keep an eye on things like the Nasdaq or the S&P. I mean, that particular stock is not as sensitive to these major indices. But if these things have a major pullback and they do test their trend support, it will likely be affected. So to also help time buying stocks, you want to see stability develop here. Now, keep in mind, I've been talking about this bearish price action. The trend hasn't changed yet. We're only looking at corrective momentum. That's all we're looking at. This whole move, that's all this is, okay, from the high to the low where we are. And it's probably going to consolidate going into the election. We're probably not going to see dramatic new lows. Although anything is possible, I'm not expecting dramatic new lows. We still have this broader trend intact. There's not even close to being broken. We have to take out this support here, the 10-230 area, like I mentioned earlier. We have to decisively take it out in order for this broad bullish trend to be no longer in play. Okay, for us to go from our outlook from bullish to more range bound. So we still have a ways to go. So don't get too focused in on this. Just look at the levels and look for the price action that should be at those levels. I'm expecting a double bottom, a failed low. I mean, that's what I'm expecting over the next few weeks. But I'm also at the same time, I'm not expecting new highs. We'll probably go to a point and then fool around a bit until after the election. That's what I'm anticipating there because of all the uncertainty that will follow. Okay, until after. So hope that answers your question there. For physical, where will we be buying for physical? So I guess you're talking about gold and silver. So for physical, I mean, here's the thing. Physical, it's a little bit of a different game because, for one, it's a much slower type of thing and you're not using leverage. So with physical, you could pretty much buy, this is a great place to buy physical because it's at a low. Because remember, when you're dealing with physical, you're dealing with a dealer. They need to make a spread because that's how they make money. And so you're not going to get like the lowest price. You're going to get somewhere above the spot low price, right? They're going to add their little what do you call it? That spread, or they're going to add their percentage to that there. So that's something you're going to have to deal with. Same when you want to sell physical. They're not going to give you like the top price. They're going to give you the price minus the spread, which, I think is ridiculous, but that's how they make money. So I think, any extreme low is a great place to buy physical, whether it's silver or gold. So you're nearing a level, because here's the thing, it's not leveraged, and that's the key difference. If it pushes this low, you're going to be losing 1-to-1. So what? I mean, what's gold going to do? Go back to 1,000? That's just not, it's not reasonable at this point. So physical, it's a lot easier to average into a position. especially in something like, gold or silver. It's the leverage that gives you a problem when you try to play that game. Okay, so this wouldn't be a bad price, somewhere around that 1850 area. And if it clears it, then just see what kind of other inflection point. Maybe the market will deliver an inflection point over here. At, what is that, 17 and a half? Another great place to buy physical if it goes there. It's hard to believe that it would, but anything is possible. So, and if it finds stability sooner, maybe you put on a little bit more at that point. But, buying into weakness is the best way to do it. And that's definitely weakness right there. Weakness within a trend that's still pretty bullish, right? This is not a bearish trend at all. So just something to keep in mind there. When things look ugly in such situations, those are usually the best opportunities. So I hope that answers your question about physical. I think it's 195 now. Okay, I'm not sure. Oh, you're talking about the option. Yeah, okay. I mean, I think that Jumia is a great opportunity. Have been Ford. Okay. When should I stop buying it? All right, let's take a look. F. I remember. I think Dave in our other chat room called F not too long ago, and I'm like, F? Who trades F? I was trying to be funny. I was like, what the F? Anyway, only DJ appreciates my bad New Jersey humor. So here's Ford, and so you want to know where to stop adding. Well, for one, DJ, you should probably stop adding right now because this is not pretty. You have a double top, actually a triple top in play. It's about to take out that support. You have no sign of stability right now. So, if you have some shares and, just sit on them, right? Because obviously it's a long-term play, right? You're trying to play something a number of years out probably. So there's no more reason to add to this. Wait until, for one, levels to continue to add is see how it behaves in the middle of the range. If you get a failed low here and the S&P, which is probably, or the Dow, because this is probably in the Dow, I'm not exactly sure, but I think it's an industrial. Either way, they're all going to follow each other anyway. If you get the fake out there and you get like a bullish fake out in here somewhere in the middle, that's not a bad place to put on another increment. But I would not do anything until some type of confirmation develops. If this thing wants to test the range low over here, which is at 582, then that would probably be your next best location to put on another increment. And if it goes lower and gives you the failed low, then that's another good place to put on another increment. But I would be very conservative with those situations, okay? You have an inflection point right there. Is that 5.5? So those inflection points, you could use that, but what you want to wait for, okay, which I think is just it's a more effective thing to do after buying some, because you're never going to time these exactly, right? You buy some, it starts to work against you. Okay, you stop buying, you wait until stability appears, or you reach some other levels, right? These are high probability levels. So if it gets there, okay, good place to add another increment. But then what you do is you wait. You wait for structure to improve, something like this over here, okay? See how this structure eventually improved? It got hammered, it got hammered, it got hammered, tried to bounce. You do nothing, it delivers the higher low, okay? Just like the dollar franc we were looking at, it delivers the higher low. Once it does that, you're like, oh, okay, that's a good sign. You want to see that. And then it starts to test this resistance, right? And stability, this is stability, but you're not sure until it confirms here. So how long? It took, what, a month and almost 2 months. So could you have been buying in there? Well, sure. After the second higher low, you could say, oh, I'm going to buy some. Try to hold on to that, see how it goes. You get this failed low situation, buy another increment, and then when it breaks out, you buy more. Okay, so now you've averaged into something that's starting to go your way rather than continually against you. All right, so that's what I would do with something like that. But as long as you're keeping your share size small, you're most likely not going to get scared out of the position, and that's a very important thing. That's why we always talk about small share size. And if you want to average into a position, there's nothing wrong with averaging into a position as long as you do it in a very carefully controlled way in terms of risk, and that is what you do with your size. All right, like some people, if you get too big too fast, now you're in a situation where you have to try to reduce your risk at any opportunity you can get. You don't want to be in that situation. It sucks. I know a lot of people in Ethereum that are in that situation. All right. So anyway, thank you for bringing that one up. I hope you found that helpful. Pure storage. Okay. Yeah. Someone brought that up not too long ago, and that's where I got it from. Someone mentioned it in here. And I was like, wow. It was on Monday, in fact. And it may have been Kev. I don't remember who brought it up. But I liked the double bottom situation. This was all nice right there. And we had, the double bottom, the inflection point. Okay. That kind of stuff. That's a good idea, DJ. So at least you have some sort of, so you remember. So I still like the location. I still like the location, Jay. I like the location. And the candle, though, the current candle, again, it's obviously following the market, okay? Not only that, you have an outside bar. That's an outside candle. That's not good. I mean, that's not a good sign to be buying into right now. Now, look, if the market tries to bounce tomorrow, sure, all these things are probably going to try to bounce again. But often, in these situations, why we get such a dramatic sell-off, and across everything, is because the whole world buys aggressively into this. They get sucked in, just like the Nasdaq. They get sucked in, and when they're all wrong, they're all getting out at the same time. So that's usually a very bearish sign in terms of momentum, and this thing is likely to test the low or even give a failed low. So I would wait to buy something like this. I wouldn't buy it looking like this. I'd want to see a retest of this support followed by some kind of bullish reversal candle. I would be okay with a single candle because this thing has given structure, and this is your structure. You have a low here, you have a low there, you have a low over here. That's structure, okay? It's taken a number of days for that to develop, so it's not like you're buying the first bullish candle and and then it's really just nothing more than noise. So I would be okay with a bullish pin bar here, or a failed low, that type of thing. So I would wait, and see how that stock market, if it can stabilize or not. Obviously, this thing is following the stock market. So, but I still like the location. Now, if it clears that support, if it clears that 14.5 area decisively, meaning, you're now at like 13 or 12, I would step aside. Just leave it alone until it can find stability along with the stock market. That's just what you have to do with these things. Okay. Or like DJ, if you want to take small bites and average into it. But if there's no stability and all you're getting is bear candle after bear candle, you don't want to get too aggressive with that. Okay. Until it shows a better sign. So thank you for bringing that up. I have 2022 F calls to get it for the price. Oh, no. Nice. Yeah, I mean, you could do a lot with options. That's why, we got to get more option stuff going on. But it's just amazing the stuff that's going on and how great prices you can get for things. So let me point out, I hope I answered everyone's questions here. Do I have any more questions? I want to point out a couple of things here. I wanted to point out, there was another stock that I wanted to point out. Which one was it? Oh, Very. Okay. I mentioned this one in the chat room today. And Veritone, which I think DJ brought this one up originally. This is what I mean about changing structure, right? You see how Very was giving us this bearish stuff for a while. And people had asked about it, and I said, stay away, stay away, stay away. Now it's changing its tune because why? We had this bullish move first. Now, chances of catching that bullish move, that initial move, is very tough. I mean, if you were watching this thing carefully, perhaps you could have gotten the double bottom, but that's easy to say after the fact, right? So let's say you missed it, okay? No problem. Most of the time, you're better off missing it and waiting for the initial move. That initial move, so what? You didn't make any money in it, but it took out that resistance. If this thing was going to continue to have that bearish momentum intact, which it might still have, but it shouldn't have taken out that resistance. So that's a first sign. That's why I said this is a good candidate for a higher low. Okay, so if we can get stability in a higher low location, this would be a good swing trade long. But the stability has to prove itself because at the same time, this may just be another lower high. It's possible. And we'll only know that when it starts pushing the lows. Okay, if it starts pushing these lows here, then yeah, then it's a good thing you didn't take it. Okay, so that's why you have to wait for stability and how to anticipate and change, how to anticipate the change and how to be prepared for it. That's why opinions are really bad. Like when I do the podcast with Henry, he always brings up fundamental opinions, and there's nothing wrong with that. I mean, that's what he does. But then he wonders why he's always like reacting and getting caught into things. Meanwhile, I pay attention to no fundamentals. I have no idea what's going on. All right, I only pay attention to price, and my timing is better, at least on the short term, because I only pay attention to price, and I trust what the price is telling me. And that's it. I don't need to know the news. I don't need to know what management does. I don't need to know anything. And that's what allows us to work with so many instruments. Now, imagine if I had to read up on 50 different stocks and the management and the price to earnings ratio and all this other nonsense. Imagine I had to do that for gold, and we would get no trade ideas out ever. So here's speaking of lousy stocks, look at this. I want to point this out too real quick, right? And talking about oh yeah, okay, I'll take a look at Workhorse too. By the way, if you have any other questions, please ask. Before I wrap this up. I think I finished a little early today. Let's see, what time is it? Yeah, wow, 45 minutes. It's pretty early. So, Canopy Growth. I almost sent this out yesterday. Okay, almost, because I'm like, oh look, we're back at the 16 level. There's support there. Well, obviously there was news today. I don't know what the news was. Obviously, a candle like this is most likely news driven. Okay. Now, this thing sucks. And I talked about ACB earlier in the chat room. I said, watch ACB as a potential thing, but they all look horrible right now, right? So is this a reason to react? No. It took out a support. It's pretty decisive. That's a pretty decisive candle. It may now have some bearish potential in there, right? So it may pull back. We may see some ugly prices. So what do you do in this situation? What if you own CGC, like I own some? Well, one thing you can do here is buy a put, okay, to protect yourself if this thing is going to go lower. It's like buying insurance. That's one thing you could do, because this thing, these stocks have not been very good. And speaking about fundamentals, their fundamentals aren't that good. Everything is just bad about these things. They're just hated stocks. So that's one way to protect yourself. You can even sell a call, okay, if you own the shares. I mean, the call premiums are going to be much lower now, the fact that this thing is on this low like this. But selling a call would at least give you some money back. And if this thing happens to turn around and take you out, well, you have to deliver the shares. But probably buying a put in this situation would be a better choice. Okay, now, market's closed right now, so you can't go do that right now. But tomorrow, if this thing hesitates, which is very likely to do, and you get like a little inside bar or something, that might be a good opportunity to buy like a protective put. Okay, with strike prices, I guess maybe the $14 area, maybe you want to buy a couple of months, at least 2 months. You really shouldn't buy front month options, because their time value decays the greatest in the front month options. So just something to keep in mind there. If you look at some of these other ones like ACB, just want to point that out. ACB, look at this. Look at this piece of garbage. I was like, oh yeah, I was telling everyone earlier, keep this one on your radar. That was before I saw that candle. I'm like, oh yeah, that looks good. And then I'm looking at it before. I'm like, what just happened to this thing? Okay, so not good. Stay away from it right now until this thing finds stability again. Nice level though, but what a piece of garbage. All right. Anyway, so just wanted to point out, that in the cannabis sector there. And look, Workhorse. Right. Wow. Look at that. Workhorse. So DJ brought this one up the other day, and his question was, remember DJ? His question was he still had some, and he wanted to know, should he let it ride or how he should manage it. And I gave some suggestions. I said you could wait for the bearish candle, all right, and then just exit on the low of the bearish candle. You could trail, and which if you trailed it the way I described, you probably would have been stopped out over here somewhere around the $25 area. Or you could just have targets in advance like we had, which our third target was $25.85. But man, right? This is why you have to use adjustments. This is why you have to be nimble. DJ, where did you get out of this thing again? And what technique did you use to exit? And where were you? Were you in from the 1585? Because this is a good example of how, how you could make like good money or a decent trade. This thing basically doubled, right? Went from 15 to 30. It took a month or two, but it eventually went there. And now it's everyone's getting out it like, like it's the next stock going to zero. All right? And there's no reason to get back into this now. This is also where people they get confused, or they hope sets in, and they're like, well, I hope it goes back up. The Robinhood people, because that's who's stuck in this thing. They were all buying it. Oh, it's great. It goes up $10 every day. And now it's like, what's going on here? I hope it comes back. You can't hope. You should be out. And determining you should be out should be in advance. Not, you don't determine today, oh, I should get out of this thing now. You should have been out because there was plenty of opportunity to exit this thing. So yeah, I don't know. I know DJ. I think DJ got out at the low of this candle up here, the 2807. I think that's where he said he got out of it the other day when he told me. But it's a good learning example here, because now, who knows where this thing's going to find stability. If you're hoping, maybe you're in from a good price, now you're going to give the whole thing back. And this game is more psychological than anything else. And the only way to get better is not to be better at psychology, it's to minimize how much of your thought process is in the game. The less you are in the game, the less thought process is going on, the better. That's why I always say we do as much as we can to take ourselves out of the equation. That's why we use buy stops to get into the market. That's why we have stop losses. That's why we use targets, because we do not want to be sitting there. We'll be second guessing all the time. That's human nature. Okay, so that's how you have to do it. You have to have some sort of mechanical way to take yourself out of the equation, and that's how you capitalize on a move like this without getting caught in something like this. Okay, so anyway, thank you for bringing that one up, DJ. All right, so I think I got everyone's questions answered, and I'm going to wrap this up now. Do I have any other questions before I go? I want to thank you all for joining me. And by the way, you know what's coming next? If you're new to Greenbridge Investing, please take a look at our website, greenbridgeinvesting.com. We have a swing trade signal service by text and by email. Most of the people in here are on that service, so they can tell you. I think they're happy with it. Otherwise, they probably wouldn't be in here right now, or they'd be saying bad things. We also have a portfolio management idea where we send that out by email as well. We don't have those constantly, but when we have them, you get them by email. It's like longer term type stuff. And then we have our chat room where we share perspective and insight throughout the day. So, oh, nice, DJ, 28. Wow, nice exit. So obviously DJ followed some of the, because we talked about this the other day. So nice job on that. And I'm sure you're happy about that too. So again, if you're new to the channel here, please subscribe to the Greenbridge Investing channel. So every time I do one of these, you get an email notification, and press the like button. Let me know if you like the video or not. Okay, I'd like to make this the best experience possible for you. And if you can, I'd appreciate if you could share this video with your social network, because the more exposure we can get, it would be I would appreciate that. It makes my job a little easier. Okay, so DJ 1585 sold 50 at nice. Wow. So DJ totally caught that move. And we sent this workhorse trade. This trade was sent out back in July 23rd. Okay. Closed it manually. Nice discipline. Okay. It takes a lot of, not second guessing to do something like that. So nice job on that. Yeah. So we sent this out on the 23rd, I believe, the 23rd of July. Somewhere around there, and I believe it activated on the 24th or something, and we had to sit in this for weeks. And people were asking, like I said in my other session, people were asking, what do we do here? And like I said, and I'll say it again, nothing. You let the market decide. You let the market do its job, and you minimize yourself from the equation. If you get stopped out, hey, you determined your risk in advance. You should be okay with losing $2, because that's the risk that was determined in advance. So either you're going to lose $2 or you're going to make a ton of money, okay? Which, depending on your size, still this thing doubled. We didn't get out at $30, But still, you know, if you had held it longer, I mean, look at DJ. He held it to 28. He held his third portion till 28, so he almost doubled. And that's a result of just staying out of it and letting the market do its job. When the information came to get out, you get out. So people ask me a lot of times, you know, I get questions when something's going vertical. They say, well, what should I do? Well, as long as it stays vertical, nothing. Just let it do its job. Let it keep going. When it starts to turn on you, you know, that's when you have to start to make adjustments, okay? You can wait for a bearish candle. You could trail by the lows of previous candles, but you have to do something to adjust to that new information. And that's all about, you know, being nimble, but not in an overreactive way. You're using market information. The market does this, the price does this, and you're prepared to do that. That's different from reacting because it's pretty much planned in advance. You know what to look for. When it's there, you follow your plan, and that's by minimizing your thought process. Like, oh, you know, I read Workhorse is doing this, so I should probably hold it. And you know, all that stuff will drive you crazy, and you will not come out ahead most of the time, especially in these situations. Okay. All right. So with that, I'm going to leave you guys with that. I'm going to wrap this thing up now if I don't have any more questions. I want to thank you all again for joining me and participating and asking some great questions here. Always appreciate it. I'll see you guys in the chat room. And if there's anything else you'd like to ask, please, you know, just put it in the chat room as usual, and we'll get to it. Enjoy the rest of your day, wherever you are in the world, and I'll talk to you next time. All right, I'll see you then. Thanks again.